In this blog entry, we'll examine what specialists are determining for the US real estate market in 2023. Will house costs go down in 2023? There is no size-fits-all solution to this inquiry, as the real estate market in the US will probably differ contingent on the area and different variables. Notwithstanding, a few specialists accept that the market will decrease in 2023, while others accept that home costs will rise. Most specialists in the lodging business foresee less purchaser interest, lower costs, and higher getting rates. Rate increments, alongside a lack of accessibility, have pushed numerous buyers to the sidelines. Home costs might fall somewhat, but not definitely as they did in 2008. Some accept that the real estate market will keep on outflanking contrasted with the pre-pandemic. The real estate market is generally in motion, and expectations for the future can be trying to make. Notwithstanding, specialists are making a few ballpark estimations about what we can anticipate before long. Here is a glance at some real estate market expectations for 2023. As indicated by a Forbes Council article, home costs are supposed to keep on descending gradually, making it hard for some homebuyers to get to reasonable lodging. In any case, the article takes note that there might be some help for purchases as more stock opens up available. This might assist with evening out the battleground, making it simpler for additional individuals to find a home that they can manage. One more forecast from US News & World Report is that the real estate market will encounter a somewhat shallow downturn that stops and starts in 2023. This forecast accepts that expansion will be taken care of by 2024, permitting contract rates to stay stable. In this situation, home costs are supposed to rise, yet at a more slow speed than they have been lately. Zillow additionally has a few expectations for the real estate market in 2023. One of the best is that lodging reasonableness is supposed to somewhat move along. While high month-to-month contract expenses and low stock will keep on being a test, there are signs that conditions might settle. This could be uplifting news for first-time homebuyers, who have been battling to track down reasonable homes as of late. Another Zillow expectation is that home costs will keep on rising, however at a more slow speed. This could be because of various variables, including higher financing costs, more stock opening up available, and a stoppage in the pace of occupation development. While this might make it more hard for certain purchasers to manage the cost of a home, it could likewise make it simpler for others to track down a property that accommodates their financial plan. At last, a few specialists foresee that the real estate market will keep on being molded by evolving socioeconomics. For instance, as children of post-war America keep on resigning, they might be bound to scale down their homes, setting out additional open doors for more youthful purchases to enter the market. Moreover, recent college grads are supposed to keep on being a main impetus in the real estate market, with a significant number of them arriving at their pinnacle home buying years before very long. Obviously, these expectations are only forecasts. The real estate market can be erratic, and unanticipated elements can constantly become possibly the most important factor. Nonetheless, these ballpark estimations can provide us with an overall thought of what we can anticipate before very long. In the event that you're wanting to trade a home in 2023, it very well might be useful to remember these expectations as you make your plans. Zillow, the main web-based land organization, has delivered its home estimation and deals conjecture for Walk 2023. The figure shows that the new strength of home costs has brought about a slight vertical modification to the public Zillow home estimation file, ZHVI, conjecture for the following a year. Be that as it may, the standpoint for home deals has been amended descending because of raised rivalry and industriously low stock. As per the Zillow figure, the public ZHVI rose 4.4% in the year finishing off with February 2023, and it is normal to keep on ascending by 0.6% throughout the following a year. This is a slight vertical update from February's figure, which extended development of 0.2% in the following a year. In spite of raised loan costs, home costs are supposed to stay strong because of the lack of new available to be purchased postings. Notwithstanding, Zillow has updated its assumptions for home deals in 2023. The organization presently anticipates that 4.3 million existing homes should be sold in the schedule year 2023, a 14% diminishing contrasted with 2022. This is down somewhat from February's gauge of 4.6 million deals in 2023. The more fragile than anticipated execution of proactive factors of home deals, joined with an apparent expansion in higher home loan rates, drove the descending change. The determinedly low stock of homes available to be purchased is the essential justification for the raised rivalry in the real estate market. The lack of homes is making homebuyers contend wildly for the accessible stock, bringing about greater costs. Raised loan fees are additionally introducing moderateness challenges for purchases. However, the deficiency of homes available to be purchased is assisting with floating home costs. Zillow's conjecture doesn't mirror the new strife in the financial area and ensuing changes to money-related strategy, which have acquainted new vulnerability with the standpoint for the economy and real estate market. Subsequently, the genuine result might vary from the figure, and the circumstances is yet advancing. In its latest forecast, Fannie Mae repeated its perspective that the real estate market is supposed to stay curbed in 2023, with home deals remaining sluggish, however seeing a slight increment contrasted with past evaluations. All-out home deals are supposed to be 4.67 million units in 2023, up from a past estimate of 4.52 million, yet the slowest yearly speed of deals since 2011. The ESR Gatherings report recommends ongoing home loan application information came in more grounded than anticipated, prompting a vertical correction of the home deals viewpoint in the close to term. Be that as it may, loan costs have moved vertically since the figure was made. The report likewise gauges a halfway bounce back in 2024, with all-out deals rising 9.6% to 5.12 million units. The standpoint for single-family contract starts is supposed to be $1.69 trillion out of 2023, a significant compression from the assessed 2022 volume of $2.36 trillion. The gauge for 2024 is $2.03 trillion. Moderateness challenges are supposed to stay raised, and homebuilding isn't supposed to be sufficient to fulfill request. Top 5 metros where house costs will drop most by Walk 2024. A few territorial business sectors are projected to see home cost declines. In their most recent gauge, they currently anticipate that home estimations will fall in 253 of the country's 895 territorial real estate markets between Walk 2023 and Walk 2024. Homer, a city situated in southern Louisiana, beat the rundown with a normal decay of 8.0% in home costs by spring 2024. Top 5 metros where house costs will increment most by Walk 2024. Zillow actually predicts that by far most of provincial real estate markets will see home estimations appreciating in 2023. Among the 897 local real estate markets Zillow financial experts investigated, 631 business sectors are anticipated to see rising house costs throughout the following year, finishing with Walk 2024. 11 business sectors are anticipated to stay level. The real estate market in Kentucky, Murray, is gauged to see the most noteworthy year-over-year house value development of 13.1%.